Hello traders, Gary Wagner here, just after 12 noon in Honolulu, 6 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, February 15th, 2019, and this is the daily report for gold and silver, our weekend review, and what a week we have seen, what an ending to a week we have seen, with the precious metals complex on fire today, all trading sharply higher, that in tandem with an extremely strong U.S. equities market. We'll talk about the rationale as we pull up our technical studies, along with our current trade. We did go long gold yesterday. We'll cover that in detail in just a couple of minutes. First, to gold. Gold gaining over 0.8%, a net gain of $11.10, closing just off of the highs at $1,325 an ounce today. That was a substantial gain, but in terms of percentage gain, it was the least gain in terms of the complex itself. Next in line was silver. Although silver closed lower on the week, it gained about 22 cents today, gaining almost 1.5% in terms of value, and closed at 15.75 cents. Platinum, tremendous in terms of the percentage gain, the leader in terms of the percentage gain, gaining almost 2.5% of value, $19.50, back over 800 at 808.70. But absolutely, the star of the precious metals complex continues to be palladium, closing over $1,400 an ounce for the first time in history, a $22.80 gain. Although it's 1.65%, we have a new all-time record high close in palladium. We'll talk about all of the precious metals in detail when we look at our technical studies. Now, as far as equities go, we had equities sharply higher, and the big really winner today was a 400-plus gain in the Dow Jones Industrial Average. That closed up 443 points at 25,883. The Standard & Poor's gained about a percent plus at 27.75. And lastly, the NASDAQ Composite gained 0.6% at 7471.75. Traders, what a move in gold today, up over $11, closing at $1,325 per ounce. We are looking at a daily chart of gold, and as my daily subscribers know, yesterday we sent out a trade alert recommending the initiation of a long position in April futures. Traders taking that call got long at 13.1620. We put our initial stop at 12.9813. That was yesterday. Today, we've seen that market gain about $10 from our entry price, and the market was up about $11. So we had a good solid trade that we put on yesterday, and I really kind of want to go over the rationale for entering that trade yesterday. And there were multiple reasons, but one of the primary reasons is the nature of this current rally. And we've talked about this throughout the week, that we can define this rally as a spike to the upside, followed by a period of consolidation, a stair step, so to speak, and then that would be followed by yet another spike, the next stair, followed by consolidation. We had this long wave that came in, and that was more than what we saw at the beginning of August last year as this market really bottomed. And then, though, that was followed by a sideways market, and then again, we had this price spike up to about 1330. That was the high that it reached. And then we had this consolidation period. My sense was this. We had, first of all, a golden cross in our moving averages. We'll show you that in a second. But we had sideways trading activity for about a week to a week and a half. And my sense was that if this market was to continue showing the overall characteristics of a spike in price and then consolidation, we needed to put ourselves in front of it. In other words, position ourselves properly for the possibility that the market would spike higher. Obviously, I had no knowledge that the news would come out today about extreme optimism regarding the current trade talks between China and the United States. That is what prompted this spike in the precious metals. It is what prompted the tremendous rally that we saw in U.S. equities. And there was really no way to determine ahead of time, unless you have a crystal ball, that that would be the outcome of the markets today. However, what I do know is that if we position ourselves properly, we have the opportunity, if in fact we're correct about the direction of the market, because in terms of market timing, we will never know when that particular price spike will come in. You also notice there's a couple of numbers here that come in about the middle of the screen, 1338 and 1319. One represents a 1.38 extension, and the other represents a 1.618% extension of what I am considering to be a wave one. Roughly put, we're looking at the price move from the mid-August levels when the market was at 1167 up to 1244. Then we had our retracements. This would be our wave two. And then wave three, of course, would start at this starting point right here. And so these particular extensions are extensions of that first rally. And so what I'm saying is that roughly we could see the market easily trade as high as 1338 based upon a 1.618% extension of this first price move that occurred last year. And that's what it represents, and that is our current target that we are looking at as a potential point to see some sort of backfill. In other words, I absolutely believe that this market will take out 1330. That is the high that came in a couple of weeks ago before having this very, very extremely shallow correction. And so obviously, traders, we want to maintain our long position. We'll want to address our stop come next week, but we certainly have a good trade under our belt in terms of timing. And traders, lastly, I do want to take a look at the three moving averages that we follow, the 50, 100, and 200-day moving averages. If you recall from yesterday's show, we identified the moment that they crossed, meaning the moment that the 100-day moving average crossed above the longer-term 200-day moving average, creating the golden cross. That was also a significant factor in us issuing a buy recommendation yesterday. And traders, the next market I do want to take a look at is silver. Pretty nice move today, up 22 cents, 1.5% gain on the day. We can certainly see this move here. However, of all of the four precious metals in the complex, silver is one that I am least bullish about. And traders, as you can see, when I convert the daily to a weekly chart, which is what I've just done, we can see that out of the precious metals complex, although it was a slight move, it is the only precious metal that closed lower on the week. And traders, in terms of percentage gains today, the overall winner was platinum. We're looking at a daily chart in platinum, and we can easily see the tremendous upside move witnessed today as this market began below 800 and closed at 808.40. However, when we convert this to a weekly chart, what is quite evident is the fact that the weekly candle did close higher, but just fractionally higher, and we are sitting at the bottom end of the range, trading range within platinum when we look at a long-term view beginning in 2016 when platinum was at $1,200 down to the lows of $760, that occurring in August of last year. And traders, lastly, palladium making a historical move this week, moving to an all-time record high at $1408.70 after gaining $22 on the day. And traders, I do think that palladium has much further to go. We've been talking about this for the last couple of months. In fact, I believe I was one of the first to point out the fact that palladium would soon move to parity, an equal price with gold. What I was incorrect about was the fact that it would overtake it and become the king of the hill, so to speak, in terms of the precious metals complex. We're at $1,400 plus, and my belief in terms of technical studies indicate that palladium has got a lot more room to the upside. I believe it could go as high as $1,500 per ounce in the short term, meaning over the next couple of months. It certainly is shining the brightest of the precious metals. Performance this week was spectacular. Not only did we see palladium close at a new all-time record high, but we had substantial moves across the board in the precious metals complex. Fortunately, we were able to position ourselves by putting a gold trade on yesterday, going along the April contract, and the fact that today's gains were based on buying rather than dollar weakness is significant, because it bodes well that we will see a continuation of today's move at the beginning of next week. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for the next daily update and review. Bye-bye.